From Sophie Financial Network. Today is February 28th, 2022. I just want to give you a quick update about the market, especially on S&P 500 and probably Nasdaq. But before getting to the chart of the S&P 500 and Nasdaq, I just want to show you something pretty interesting. I know that I covered this before in my previous videos, especially 2 weeks ago, 3 weeks ago. If you look at my weekly analysis, you will find out what I explained there. But here's the interesting thing. I just want to mention it again. As you know, geopolitical tensions are picking up, and there is a negotiation between Ukraine and Russia, and everyone just put a sanction against Russia. Seems like Russia is in trouble now. It is in big trouble, and they're not gonna long last with those troubles. Especially if they invade Ukraine or whatever, even they can't survive, just because all around the world actually are against Russia now. So they can't survive. They need to come up with a conclusion, and I know that market is kind of find it out. Like, even whatever happened with the geopolitical issues, that's going to be resolved. Because no one can survive in this situation like this. Anyway, so here is the yield curve chart. This is a US 10-year treasury bond minus a US 2-year treasury bond, and it gives us like a yield curve. And as you see here, whenever we are getting down to a zero level, like this is the one, whenever we are getting to this level, we are hitting into recession. And look at that, the previous date, as you see here, 2098, we just hit this one, going back up again and then coming back in 2000 recession. And here is the 2006, we hit it that one. So 2007 we got recession, and here is the 2018 and 2019 we hit twice, and then 2020 in a sudden just recession came up with a COVID crash. And right now, like a yield curve is just going down dramatically, and everyone's saying, okay, there is going to be another recession just because we are getting to this one. But right now we are not hitting this yet, and when we get to this level, it gives us, like, I don't know, 8 months to at least 12 months or 18 months sometimes to dump us to the recession. Right now we have far away from this line. But here is the interesting, what was the reason for this recession? Can you guess what was the reason for this recession? Everyone is saying something like there is going to be a dot-com bubble, like a mortgage subprime mortgage default here, or mortgage security default here, and here is like a COVID crash. But all of that coming to one thing, and this is pretty interesting. And everyone is talking about Fed is hawkish, and Fed is going to increase the interest rate, and we are heading into recession just because Fed is going to increase the interest rate. I don't know if Fed wants to increase the interest rate, and how much they want to increase the interest rate, and how many times they want to increase the interest rate in this year and next year. But the important thing is, I covered it in previous videos. Probably I'm gonna put a link there up there so you can just see that. But there is always a lag with interest rate hike and recession. So when Fed starts to monetary policy, to change the monetary policy to tightening, and recession is not gonna happen at the same date. It gives us the time. That's the first reason that I'm seeing we are not heading to the recession, at least for this year, just because of that reason. Probably there are other reasons coming up, and we don't know yet, just because the reason that market is panicking, that's not the main reason for the recession this year. And there is another thing that is interesting. Here is the fund rate, Fed fund rate, and as you see here, whenever interest rate is going higher, market is starting to go higher. But when this one is going down, market will start going higher. But here is the divergence. When this one, Fed fund rate, is going higher, recession is coming. Fed fund rate is going higher, recession is coming, right? So it's gonna take time to see recession in the market. And as you see here, 2004, Fed fund is going higher, Fed fund is going higher. But if you just put S&P 500 here, there is going to be another chart, which is SPX, right? Just as an example, if we put S&P 500 here, here's the thing. When interest rate is going higher, S&P is going higher as well. So when interest rate is going higher, S&P is going higher as well. So there is no reason to see if Fed fund is going higher, S&P is going dump right away. So it gives time to roll over. It gives time here to roll over again. So let me just clean this one, S&P 500, and look at this. But here is the divergence, obvious divergence. When this one is coming down, Fed fund rate, yield curve is going higher. So yield curve is going down, Fed fund rate is going higher, right? And here's another interesting thing. Yield curve is going down, Fed fund rate is going nowhere. That is pretty interesting. So this gives me that Fed fund rate, even if it goes higher, it's not gonna go higher dramatically like this or like that, just because this one is coming down by itself because of the inflation, interest rate, whatever you want to call it. This one is coming down while Fed fund rate is to zero, right? So this is pretty interesting that it gives me a confidence that this is not going higher dramatically. Like there is a JP Morgan or Goldman Sachs or whatever, they said they're gonna increase, or Fed wants to increase fund rate, like interest rate, 9 times this year. This is absolutely ridiculous comment. When I just hear that, I can't stop laughing at it, just because it is impossible to increase the rate like that. Otherwise, they want to kill the market immediately. Like they want to just dump everything to the recession, kill the market. And if they want to do that, for sure, yeah, they will do that. But other than that, they're not going to increase the rate dramatically while inverted yield is going down like this. Yield is getting inverted and we are getting into recession, especially when this one just spiking up like that, this one smashing down crazy. All right, here is the S&P 500 daily chart, and as you I wish you would look at my analysis video, weekly wrap, just posted 2-3 days ago. Here is the trend line that we are approaching to, and this is pretty interesting, just because the shorter term line, like this one, the short-term trend line, here, right there. So if you look at this short-term trend line, which is 4 hours chart, we are kind of challenging this trend line. And this dynamic trend line doesn't work anyway. So we should go to the other one, and which is this one. And if you see, just let me zoom in a little bit. If you see here, and this trend line, if you just go with this high, we just have like a failed breakout coming down. But right now we are consolidating here. And the interesting thing is, if we consolidate here, it's going to go higher. But again, look at this level, which is 4,500. If we get above 4,500, so ideally 4,600, we are getting to the bullish momentum. Otherwise, we are going to the sloppy and choppy and consolidation phase for now. But right now, 4 hours chart gives me the data that we are consolidating, and S&P is kind of like strong to attack this level, especially to 4,500. All right, so let's go to the hourly chart, which is pretty short-term time frame for me at least. And here's the level, and as you see here, there is a choppy and a sloppy, but the good thing is market gap down, like future gap down yesterday, but it goes all the way back up here and finish the day almost flat, just because if it goes above, Nasdaq finished a positive, but this one is flat. So but I see here a clear divergence in MACD, clear divergence in RSI, which means the momentum is falling and the momentum is not that strong. But if it consolidates here, that would be the best scenario. If it consolidates here, then we can see S&P is going to attack this 45 level here, which is the lots of resistance there. All right, so let's go to Nasdaq, just because I want to give you a brief update for Nasdaq as well. And as you see here for the daily chart, I just posted a picture in the channel, in the Telegram channel, and you should see that. But here is the trend line, and we are hitting this trend line. You just close, just touch on it. All right, so but how we can break it through, we can go, if we can go above this level and we close above 14,500, at least 14,000, sorry, 14,500, that's going to be a level to say, okay, this trend line is broken, right? So if you go to 4 hours chart, so here's the 4 hours chart, and as you see here, moving averages are getting mixed, just because we are above SMA 20, SMA 50, but SMA 100, 150, and 200 is just above it. And here's the supply area. As you see, and this is the previous supply area, wide range bar, test going down, and here is the nice reverse head and shoulder. That's what I'm seeing. Here's a nice reverse head and shoulder, especially with, no, there is no divergence anyway. So I thought that there is a divergence between these two, but there isn't. But this head and shoulder, if this one triggers, it means if you are getting above this level, which is pretty close by the way, there are a couple of items are getting into the play now. If you are getting above this level and close above it, which seems like there is going to be a possibility for tomorrow. Tuesday is very, very important. If you're getting above 14,500, then we should see this trend line is broken, this head and shoulder triggers, so we are going all the way up to 15,000. So that is very, very key level for watch. Just keep an eye on 14,500 for Nasdaq. If you break through tomorrow, then we are heading to 15,000, and if we consolidate or hold this level, probably we are going to test new all-time high. All right, so here's the quick update for today. I wish you enjoyed. If you like this video, please give us thumbs up, and if you have any comments, just go to the chat box down there. Please put your comments there. I wish you have a good trading week. Have a nice day. Bye bye.